Kia ora, everyone. Looks like we're live. If we could just get some thumbs up in the chat, we'll get started as soon as we know that some of you can actually hear us. Brendan's there. Thanks, Brendan. If we get a couple more, then we'll get underway. Otherwise, it might just be a private viewing, Brendan. Oh, no. Good. We're good. Well, welcome back to Lunch Money. Kia ora, everyone. Thank you so much for joining us. It's another week. It's the first time since we've done one in a while, but we're back to scheduling them and doing them regularly. So we're going to be doing them every Thursday at lunchtime, and we're also available as a podcast. So Spotify, Apple Podcasts, and Google Podcasts. My name's Leighton Roberts. I'm one of the co-founders, co-CEOs of Sharesies. Got Sonya here, also one of the co-founders, co-CEOs Sharesies, and we're super lucky to have Sophie Moloney with us, who's the CEO of Sky TV. Welcome, Sophie.
Kia ora, Leighton. Kia ora, Sonya. Kia ora, Sharesies. I'm excited to be here.
And we're super chuffed to have you here as well. Just a reminder that if you have any questions for us, you can submit them through the Ask a Question button down the below. We don't really follow the chat too much on the side, so make sure you get those questions in there. If there's anything that we missed, we'll try to follow them up afterwards, but we'll get through them as many of those as we can as possible. Quick legal disclaimer, no personalised advice, so the three of us will just be speaking generally today. And once again, if you do want personal advice, you can go and speak that independently. Investing does involve risk. You're not guaranteed to make money, and you might lose the money you start with. We don't provide personalized advice or recommendations, and any information we provide is general only and current at the time. And the final point before we get underway, so please just be kind and respectful towards our speakers and also fellow viewers. Otherwise, we'll have to take steps to remove you from the webinar, and we really don't want to have to do that. Sonya, I'll hand over to you to welcome Sophie.
Great. Thanks, Leighton. Kia ora, Sophie. Thanks heaps for joining us today. We're already seeing lots of great questions coming in. So first, just can you kick off by telling us about yourself?
Thanks, Sonya. Kia ora, everyone. Well, it's always an uncomfortable question for a Kiwi, isn't it? It's like, what would people like to know? So yeah, I'm a Kiwi. I grew up in lots of different parts of New Zealand because my dad was a headmaster at boys' boarding schools. And probably the best privilege I had of that was growing up most of my childhood in the Wairarapa, because we're at Rathkill College. It was beautiful school grounds, so very free. I'd give away my age, 70s and early 80s as a kid in Kiwiland. And look, I studied law, didn't have any other ideas at that time, and actually made my way across to London in 1999. Did quite a lot of clubbing at that time, but also a little bit of lawyering before the dot-com bubble burst, and realised the law firm wasn't quite for me. I couldn't be myself, so I ended up going to Sky UK and didn't plan it, but ended up having a career in pay TV. Did all the contracts and work there that no one else really wanted to do, so I learned a lot, made a lot of mistakes, and managed to fix them. And then as part of that, I had an opportunity to go to Abu Dhabi and Dubai. First of all, Abu Dhabi, which I didn't know where it was when it first came up. My husband knew it was tax-free. That was his input. And we went across there to launch a news channel called Sky News Arabia. Super awesome experience. Anyway, roll forward, we had 3 boys. Always wanted to get them back home to Aotearoa before they hit their teenage years. So I'm very privileged to now live in Whakatū, Nelson. I commute to Auckland for work. And of course, on 1 December, I got appointed Chief Executive at Sky. So massive opportunity and really excited to be here. So that's a little whistle-stop tour of my history. I hope that's helpful.
Yeah, totally. What a fascinating history. I feel like there's a lot that we could dive into there. But we'll start with, this is your 4th chief role at Sky TV, and a recent role, as you point out, starting as the chief exec in December last year. Are you able to tell us about the different key responsibilities and how those different roles have gone for you?
Yeah, sure. I mean, I actually really like your guys' titles. Is it 3EO or something like that? I think that's pretty cool. And yeah, I mean, I joined as general counsel in January 2018. And then when Martin Stewart joined, I'd worked with Martin at a company called OSN in Dubai. So I was promoted to Chief Legal Officer. So that had, you know, responsibility for all things corporate and commercial legal, as you would expect. And then I actually did make a foray into a pretty convoluted title, Chief Legal, People and Partnerships, which you could call CP Trio. Don't think of me as being that really annoying CP Trio character, hopefully. And so what that involved was extending out to look after our people, and our partnerships was really all of our commercial arrangements. So that was pretty cool. And then, yeah, I got promoted to Chief Commercial Officer. What did that mean? Well, I added ad sales and then Sky Business to the portfolio, which was, you know, good to have some P&L responsibility. Sky Business is obviously our commercial pubs and clubs, accommodation, hotels, motels. And yeah, I suppose it was then rapid fire into the CE role in December. So definitely more on the commercial side and kind of outward partnership side. And I suppose the biggest opportunity for me stepping into the role was really grabbing hold of the operational side of the business and also the strategy for Sky, which has been pretty cool to date.
Yeah. And so can you tell us a bit of what your day-to-day might look like?
Yes. So one of the pieces of advice I had from an executive coach coming into the role is that you need to jettison your prior roles. And I've managed to do that. Got a great new Chief Commercial Officer. So my email count has actually dropped quite a lot, I can confess. If Johnny's listening, he knows what I'm talking about. But I found, so I'm really conscious of being very present in the office, other than meetings in the city. So we're based out in Mount Wellington. Being present, a lot of meetings, a lot of time with our crew. And again, the thing I hadn't quite anticipated stepping into the CE role is the number of times you might feel like you're carrying the same conversation, but actually communication is critical, and being really clear and hopefully consistent in the messaging is definitely a key part of the role.
Yeah, great. And so can you tell us a bit about what Sky's vision is? What's the vision for Sky?
Well, I've got, that's a conversation with our crew, and I'm really looking forward to spending time with everyone at Sky again next week. But where my current thinking is, when you talk about vision, you want to think of something that's almost unattainable, is if I think about Sky, when we first launched 30 years ago, we brought choice to Kiwis. And then when we launched My Sky, which is the recording functionality, we brought ease. So I think about those two features and feel like the place that we need to play as a company is to almost reclaim that place of making Kiwi lives really easy, a beautiful experience, viewing experience in the home or on the go. And I suppose if I had to put that into some kind of, what does that feel like? Because we've just come through summer. For me, it should feel like something of having worked outside in the sun all day or been outside, and you come in and you're really thirsty and you have that beautiful cold glass of water. I want us to have that kind of feeling, life is complicated. When I get back to home or I'm choosing to watch content, because it is a choice, it should just be a super easy experience. So that's kind of where my vision sits at the moment, but it's going to be a conversation with our crew to actually land that hopefully in the coming weeks.
Yeah, great. What a cool illustration of a vision. I always love it when it's like an actual situation that we can all really relate to. So how does Sky TV make money?
So we call ourselves a content company. So how do we make money? We secure content from lots of different providers from all over the world and at home. So we have you'd be probably quite surprised to know how many content supply arrangements we have, over 500. And that's between all of our entertainment and news and movies, and of course our sports arrangements. So we have agreements with those rights holders and sports codes, and then we package that up and we deliver it into the homes of New Zealanders by our Skybox service, and also through apps, Neon and Sky Sport Now. So we capture it up, we package it up, and then the revenues come in predominantly from the Skybox side and the streaming side. We also have some ad sales business, so just selling airtime on our channels, and our commercial business, which is pubs and clubs throughout New Zealand, and hotels and motels, and some different businesses as well. So we're a content, we collect it from a live sport perspective. We obviously capture it and curate it and deliver it to screens. And that's the way that, if we get that cost profile right and the revenue keeps coming in, then we can deliver real value back to our investors, including our Sharesies owners.
Great, that's awesome, thank you. I think now we'll move into some maybe more questions around the strategy, and I think you can't speak about strategy with any business leaders at the moment without talking about COVID, and specifically, I guess, for you, the massive movement online and into the digital world. So interested in how you've seen this affect your business.
Well, I think that we've talked about the fact that we came through COVID pretty well, and a little bit of interference on my side. The particular sugar hit, if you like, was on the Neon side. Obviously not Sky Sport now, because live sport, as we know, was massively impacted. So Neon saw a significant uplift. It was difficult to deliver into homes during lockdown level 4. But overall, from a business side, I think that what people rediscovered was the broad range of our content. So we didn't actually see too many customers, thankfully, leave us during that time, even though we had an impact on sport. And then the other thing is obviously everyone had to leave site. We only had about 55 essential staff, so pretty phenomenal movement to get close to 1,000 employees working from home. And, we're now in that process, as a number of companies are in New Zealand, of trying to figure out what's the right way to super support our crew, have the right balance between working at home and having, pretty awesome collaboration spaces at work when you have that kind of connectivity and sense of community again. I think we haven't quite got there yet, but that's a conversation we're having with our crew.
Yeah, great. And so who do you see as the main competitors for Sky?
So I suppose in the past, we would have, if we were thinking about SVOD services, Lightbox was someone who was also buying content and distributing it. And we did a deal with Spark, and that's now become part of Neon. You've got on the entertainment side, in terms of buying content, there's an element where the free-to-air providers, TVNZ and TV3, may from time to time want to go after the same content, but that's changed a lot in recent times with COVID impacts on studios. So we have big output deals which are working well for us. And then look, of course, on the sports side, Spark Sport has the New Zealand domestic cricket. So we have competition on the sport front, which wasn't there for a long, long time. But from my perspective, I suppose I obviously acknowledge competition for rights, but ultimately what I see is an opportunity for partnership, so that actually, if we really focus on what matters to customers, we can find a way to partner, like we are with Spark on Neon, and we have a Sky Sport Now and Spark Sport bundle. That makes a lot of sense for us. So, and of course, we've got Vodafone, who we distribute our main channels through, with Vodafone TV. So they're not a competitor in that sense. They're actually a partner of ours. Hopefully that gives you a little bit of context.
Yeah, great. Definitely a lot more conversations now around partnerships, which is cool. The share price was once at about $3.60, I think. It traded yesterday around 17 or 18 cents. So are you able to explain the key things that led to this reduction in your view, and also how you think the market's pricing it there?
Well, I think that, the share price around the time of the Sky and Vodafone merger, probably since then we have seen a significant decline. And obviously that was the decision of the Commerce Commission at the time, which we respect. And I'm always one of those ones where I don't want to get fixated on the share price. Of course, every CEO will say we're undervalued. And it's a natural response. I suppose what I'm really focused on is trying to get the value equation right. So if we can work really well with our content partners, get our crew to really believe in the products that we have to offer, so that New Zealanders, whether they want to watch through a box in the home or they want to watch on their phone, make the choice to subscribe to our services, then the value equation will go back to our investors. At the same time, of course, looking to manage our costs, because anyone looking at our results and seeing the first half is, there's a weighted earnings to the first half, and the go forward is more challenging. We know that it's because we've got a significant programming rights cost line, but we have a game plan to manage that going forward, which I'm happy to talk to.
Great, thank you. I mean, maybe we should start to talk to a little bit of that now.
Yeah. So I think I talked a bit in the results around the concept of co-exclusivity. So maybe I'll just go there for a little bit. We used to be in a world where you want everything exclusively, and then you're the only place to get it, and so customers have to come to you. Separate to that, there's non-exclusive, so it's freely available on different services, and you'll see that with movie titles in particular. You might be able to get it on a Neon or an Amazon or a Netflix, so that's just non-exclusive. It's about the customer experience and choice. And then you've got this new language of co-exclusivity. And what does that mean? To give you the best example to exemplify it, our deal with Discovery, which we announced in December last year, we have 6 of the Discovery channels available via our Skybox service. And once Discovery launches its own app and market, that same content will be available on that app. So there'll be 2 places in New Zealand that you can get access to that content. Our data and insights told us that actually our Skybox customers really like the linear experience. They like being able to record. They create their own on-demand schedules, if you like. So, this co-exclusivity enabled us to have a conversation, not just about super serving our customers, but by bringing the cost line down at the same time, because by doing this, we're no longer paying for that exclusivity premium. And so it's not just wishful thinking. By embracing this kind of new direct consumer world, but being very conscious of our Skybox base who live throughout New Zealand. Not all of them have access to broadband. Not all of them are at a life stage where they want to consume via an app. That's a place we really want to play, which does then enable us to start to manage that cost line, if that makes sense.
Yeah, it does make sense. Does this sort of mean the view of where you compete has completely changed? It's like quite fundamental. If it's not on the exclusiveness of what the content is and stuff, it's more about how it's delivered and where it's delivered.
Yeah, I think that is part of it. I think you've still got to have some content that's a real hook for customers. So, but user experience and choice and ease becomes a bigger part of it, and I think that's where we do need a new bit of kit in the home, a new box. And even though there are 40% of our base who actually really like the current box, they like being able to record, they know where their channels are, and they like the remote, that leaves us with a decent tranche who go, you know what, I prefer a more digital experience. And I'm in a household like that. We have HDMI 1, we look at Sky, then we go into the apps, often land back in Neon, I have to be honest, but not just a self-promotion there, just honest comment. Anyway, that's the new world for us, and the research says if we can bring a new piece of kit into the home that helps you search through free TV, Sky TV, and into some of the apps, and just make that viewing experience more intuitive and easier, we think there's a real opportunity for us in New Zealand.
Yeah, cool. So I guess speaking to that exclusive conversation, Rugby New Zealand has a stake in Sky. It would be great if you could just explain that, the dilution impacts of that to everyone, and also the significance of that strategic partnership.
So first up, hugely significant to us. It's our biggest content partner. And yeah, when we did the deal, it was seen as groundbreaking in 2019. Because it's not just about the SANZAAR contract. We have a partnership arrangement and then the investment in Sky. So part of the deal was they got 5% shareholding. You're absolutely right, Leighton, during the capital raise that was done during COVID, level 4 lockdown, not a great time for sports partners. So at that juncture, New Zealand Rugby didn't participate. So there was a dilution of that shareholding, but it is still a shareholding in Sky. And the reason that that was agreed, or certainly part of it, was, you know, we are New Zealand Rugby and the All Blacks, but also all of the local club competition and Super Rugby Aotearoa. Yeah, it's really important. It's really important for Sky and our customers. So that's why the deal was structured like that. And yeah, they're an incredibly significant partner for us.
Yeah, great. And then I guess sticking with the live side of things, so you're a sponsor of the local stadium here in Wellington, the Cake Tin. Can you talk through your rationale about why Sky chose that particular site and how that makes sense for shareholders?
Yeah, so Sky Stadium, you know, I suppose if I step back and look at that, and some might go, what's the point of putting your name on a stadium? And I did have some feedback early on when the alcohol ran out at the stadium, and someone called me to say, what was I doing about it? And I said, no, we're just sponsoring the name. But stepping back, exactly to your point, Sonia, the live environment for sport is super important to the viewing enjoyment in the home. So if you can get that live experience to be about entertainment, not just about what's happening on the park, and transform it, that's how you start to really kick off and get more joy out of the viewership. So one of the biggest drivers with us and working with Shane at Sky Stadium is to really explore how can we, not just this year, but in the years to come, try different things, different innovations. So we've got a new in-stadium app, which we're keen to test and learn and see if we can just add more to that stadium experience. I'm also really keen. I took my 12-year-old twins and my husband went along to watch the Black Cats play Sunday a week or so ago, and I was sort of struck by the thought that actually there's more that we'd like to be able to do, particularly for that younger generation. And so Sky Stadium, the partnership we have there, we're really keen to explore how you supercharge that live experience again.
Yeah, cool. And I might have misunderstood a little bit, but are you thinking that it's also how you take maybe that live experience into the home? Is that part of what you're thinking?
It's more about, so I suppose just think about COVID and think about the impacts of no crowds. It almost felt like you were sort of watching something, I don't know, that it just didn't feel right. And when you've got that in-stadium experience, which you can almost, sense and feel at home through your Skybox or Sky Sport Now, whatever it might be, assuming it's sport, you know, we think that makes people want to watch. And then coming back to investors, want to continue their subscription or maybe subscribe because, wow, you don't want to miss out on that moment. It was so cool coming from Sky Stadium. That's the objective anyway.
Yeah, cool. And then why the move into broadband? Where did you see the opportunity for Sky in this market?
Well, I think the broadband market, everyone will say it's crowded and what's going on there. The reason it is because there's a great regulatory regime you can tap into with the likes of Chorus and the local fibre companies. And look, we just saw it as an opportunity to give value back, first and foremost to our Skybox customers who are in fibre-ready homes, and to critically deliver a service which continues on the theme that Sky TV has, which is one of reliability. So we've got a proposition that we think is going to make sure that the Wi-Fi really works in the home and to have the support to make sure it really works. So a couple of elements of quality of service in the home, and service of getting it into the home. And it's a variable cost model to give comfort to our owners. So if customers don't see value, we're not going to be there forcing it, because a number have already got the satellite dish, so delivery of their content they may be comfortable with. But we just see it as a natural adjacency. The market conditions feel right for us, and if we can deliver that value back, then we're gonna hit the sweet spot that we're keen to focus on with our customers.
Yeah, great. And you talked a bit about the future plans for Sky and I guess what you called the co-exclusivity, was it? I think I've heard something similar described as co-opetition.
Oh, yes, co-opetition.
But what outside of that, what's next for Sky and how are you thinking about the future?
Yeah, and what I should say is we're very comfortable with exclusive as well, where it makes sense. But just in the content map, if you look ahead, I think that as I said at the outset, that choice and ease we brought to Kiwis in the past, we almost want to reclaim that position in the home. And if we can get that right, we're going to have a number of, many more customer relationships. And that will also then give us the scale that means that we're going to be relevant for all of our key studio and sport partners going forward, which in turn will deliver value back to our shareholders. So sounds nice and simple, doesn't it? There's a lot of mahi, and all of this only happens if our Sky crew have the tools and the support that they need. So the one piece I haven't really talked about is the investment we want to make in our own crew to make sure they've got the support, they have the belief to continue doing the awesome mahi and focus on what matters to our customers. And there's a lot of work to do because customers have told us for a long time, you know what, I think you're too expensive or you can do better. And we think they're right. We think we can.
Great, thank you. We might jump into some Q&A now from the people who've been listening today. So there's a lot, quite a few questions here, but we'll start from the top. The first one's from Ron. We'll try to do this as a quick fire to get through as many as possible. So that just means, Sophie, if you can try,
I'll give it a go
as short as possible, and we'll see how we go. So how is Sky TV going to challenge the likes of on-demand streaming services like Netflix, Amazon Prime, Disney, etc.?
So don't need to challenge, need to coexist and have the right tech platform so that we continue to have those relationships and super serve Kiwis as works for them.
Great, thank you. Do you ever see Sky Go being sold as a standalone product?
Great question. Definitely part of the conversation we're having of, do we look to untether it? Is there an opportunity there for Sky as an app? And as a ready conversation amongst my colleagues. No plans at this stage because we do see it as being a really important part of the Skybox arrangement, but we're also conscious that there are Kiwis who may just want to consume via an app. So we're keen to explore that.
Cool, thank you. Sonya, I'm going to hand over to you for questions here because my screen has frozen.
Great. No problem. So the next one is from Guy, and he's saying, we're currently witnessing social media platforms transition into the communication space with products like Messenger as they are free to use worldwide as long as you have a data connection. Because of this, companies like Vodafone and Spark are being forced to transition to media with products like Vodafone TV and Spark Sports. Do you plan to stay in the media space and develop a new updated business model, or are you planning on changing tech?
Our focus is on being a content distribution company for all New Zealanders. So, and yes, broadband is there to augment. Mobile might be something that is interesting in time, but right at this now, no. We deliver great content to all Kiwis. That's what our game plan is.
Cool, great. The next one is from Oscar, but we've already covered that around how Sky will fit into broadband. Is putting Sky Go or other digital platforms on the new generation of consoles a priority? Will this happen this year?
Great question, and one that I am going to have to defer on because we definitely want to make our content as available as widely as possible, but I actually don't have the answers to that right now. So I'm going to have to come back to you, Team Sharesies, and follow up.
Fantastic. So the next one's from Kevin. Has Sky looked at providing additional products alongside broadband, such as cloud services, data centres, and web hosting?
Not those. As I say, I think mobile may be an opportunity because it's a great way to distribute content into the hands of Kiwis. I'm sure some of my tech team would be interested in those, but at this stage, it's not on the product roadmap.
Yeah, great. And so what efforts are being made to retain loyal customers? Will any rewards or incentives be offered?
So I think this is, for me, an issue I really want to lean into this calendar year. We've had incredible loyalty, some customers 25, 30 years, and I don't think that we have done enough to say thank you for that. I suppose for the investor community, that doesn't necessarily mean discounting or giving things away. It can mean Sky experiences, and I think as we look to it, we've got a big piece of work on value for money and how we package up content. So, you know, that's definitely the conversation for this year. And from my part, I do just want to say thank you right now for all of that loyalty to date.
And the next one's from Rick. What portion of income is derived from Neon, and has this shifted over the last few years? And sorry, you go. And then it's just one around future developments.
So we have, 76% of revenues does come from Skybox Space, but in terms of streaming, we've grown from 25 to 36 million. So, and Neon obviously sits in there. So great year-on-year growth, 80% in terms of sub numbers. So yeah, that revenue is coming in, which we're excited to see.
Yeah, great. Then will there be a new set-top box this year with 4K HDR and Dolby Atmos support? Sorry, the question just disappeared.
Yeah, so we definitely want to bring a new set-top box to the market in New Zealand. Timeframe, I can't confirm yet, because actually we need to go and make sure we've got the business case signed up by the board and got the right arrangements in place. But yes, when it does, we definitely want to have ultra high definition 4K for those customers who are really interested in it.
Cool. And then one about the future plans for Neon. Is there any plans to go international?
I would love to be able to say yes to that, but no, the way that the rights work, just for clarity, is they're sold territory by territory. So we buy the rights for New Zealand. So Neon is for New Zealand.
Yeah, cool. How will Sky's future business model maintain profitability in a small market like New Zealand when global competitors are foregoing returns for scale?
Yeah, and look, I think it's a great question, and hence us looking at our market. And you know, I suppose we do have the unique position of being able to deliver to all of New Zealand through our satellite connectivity. No one else is coming to launch that type of business in New Zealand. And so what we need to do is find that way to manage our cost line, grow those customer relationships, and to the point about direct to consumer plays, be that partner, whether it's just putting the app on the box or it's a version of co-exclusivity, as I talked about. So that's how we think we're going to remain really relevant and have a profitable and sustainable future in New Zealand.
Cool. And there's a few questions around dividend payments and when can we expect to see dividend payments?
Yeah, so I understand, and dividends are super important to investors, and the board has said it's going to reconsider our options in financial year 2022. So it's certainly not right now. And at this stage, we are in an investment phase to set ourselves up for that sustainable profit in future. So look for that from our board next financial year to have an update there on the dividend policy.
Cool. Any plans to expand catch up on Prime into a Sky on-demand style platform with free streaming content?
So it's a live discussion around what we do in what we call the free to access space. And don't have any answers right now on that front, but definitely a conversation that we're having with our team.
Cool. Thanks heaps, Sophie. I don't think we got through all the questions, but I think we gave it a really good shot. So thanks for that. I might pass over to you, Leighton, to wrap up.
Yeah, cool. I might just ask one more question, Sophie. Up to you whether you answer it. But what do you think is the best reason for investors to choose to invest in Sky at the moment?
I think our stock is undervalued. As I say, every CEO will say that. I think we have a strategic story that resonates and makes sense in the New Zealand market. And my role is to ensure that our team have everything they need and the relentless focus on execution so that we can deliver that value back to shareholders in future.
Great. Thank you so much, Sophie. It's been so great. One of the big things, Sharesies was created to give people with $5 the same investment opportunities as people with $500,000. And speaking to our countries, the leaders of our biggest businesses is a huge part of that. So we really appreciate the time. Thank you to everyone who tuned in. We're really stoked to be back and sharing lunch with you again. We'll be back again next week with a guest to be announced in the next few days, I think. Sonya, I know there's some updates. My computer's still frozen, team. Sorry, this is all those great notes prepared for me, but maybe you can.
This is really flexing our improv muscle.
No, good on you. Well, I was going to say kia ora from me anyway. Thank you very much for having me.
Oh, thanks heaps, Sophie. I think one just thing to add before we wrap is to remind everyone that Australian shares are coming to Sharesies soon, and you can register your interest for early access through our website. I think we might chuck a link in the chat. So key things on that are that we are working on adding thousands of companies and exchange-traded funds that are listed on the Australian Securities Exchange, also known as the ASX. So you can have the opportunity to invest in more businesses close to your home and heart. New Zealand, US, and Australian shares in one place. So yes, we'll be back here next week. Kia ora, Sophie. Thank you so much for your time, and thanks everyone for tuning in.
Kia ora. Have a great day.